The following is an update and technical analysis on the US Tech 100 based upon the 60-minute interval, in which I will additionally dive into the US 500 S&P 500 futures based upon the daily time frame, and I will give an update for ZIM integrated shipping services on the daily interval as well, where I want to get right into the economic data that joined the party. Right off the bat, with the S&P 500 Case-Shiller Home Price Index playing nicely in October with a 0.3% versus a 0.5% consensus and expectations. The Chicago Fed National Activity Index did a trend-defying leap, with the Philly Fed Services Survey throwing a spectacular expansionary party, and the Dallas Fed Manufacturing Index for December showing up higher than predicted, with small caps just keeping the fireworks going, while crude oil finally joined the winner circle. If you hadn't seen that previous video and technical analysis on crude oil West Texas Intermediate futures that I had envisioned based upon the daily time frame, in a twist of wild surprises, we had the data where Americans are throwing cash around, defying the confidence levels as they completely diverge, and the mystery behind that, and in my opinion, has to be the debt. Personal, corporate, government spending on an all-out spree, and the only logical suspect is a complete debt trio, especially with programs and new services like the buy now, pay later. And I could just go on for hours deciphering some of the micro and macroeconomic data, but we'll deep dive straight into the charts right out the gate here on the 60-minute time frame. And we have this primary minor reactionary uptrend line that will be correlated with a potential move with an alignment of the 16,835, call it minor price resistance around this support level. If and when we go on to retest and re-challenge that key pivotal inflection point, long traders and or bull traders must defend this key primary uptrend line really at all costs to avert any further damage within the technical momentum indicators, to go on to re-challenge these extended negative and bearish divergences that have only continued to construct and expand on a much larger scale within this key inflection point based upon what we initially had, which was this bearish rising wedge pattern. Put in a nice, clean, big divergent high. We had that additional breakdown sell signal within the hourly time frame, which initialed a snapback and or counter trend morality, and we caught the vast majority of this big drop here on a back test of the 236 fibs retracement, call it 16,657 price resistance, only to really to the button for any active and or day traders to defend the 382 fibs retracement, call it 16,554 price support, and that was heavily been defended, and a continuation of an uptrend and big rally for long traders under bull traders in retracing the entire drop there, trade set up to the upside. And here we are, where the risk reward really favors the short side in the near term, if and when we go on to revisit this key inflection point. Long traders, bull traders, they want to defend, even potentially defend the 16,861 price support to hone in on, to re-challenge those extended and negative divergences that have only continued to construct and establish on a much, much larger scale here, and what comes within that technical aspect are increased odds. The larger within the time construction of these divergences increase the odds for a much larger drop. Short sellers, bear traders, they want to see a complete undercut of the 16,861 zero fibs retracement, and they want to see a solid hourly candle close breakdown sell signal, additional secondary sell signal to go on to re-challenge the 16,763 price support, additionally the 16,708 and the 236 fibs retracement. With the stochastics 1033 having a bearish crossover, big move to the downside, where we additionally have near-term stochastics divergence, and that is telling for an early indicator. Now, if we take this level out, if we undercut the 16,861 price zero fibs retracement price support, then we will additionally have a confirmed bearish crossover within the MACD, only increasing the odds for a backtest pullback to the primary reactionary uptrend line. And make no room for confusion, our current technical status screams overbought conditions where the risk-reward battlefield tilts in favor of the short side for this trade. Taking you out to the US 500 S&P 500 futures based upon the daily interval. And what we have here is a primary reactionary concealed and hidden trend line, which is the basis for a potential cuts through a series of wicks, major reactionary highs and lows, and that will be the most pivotal key inflection point for short sellers and or bear traders to defend heavily in correlation of the 4820 price resistance, call it the previous reactionary all-time high of 2021 here, and that will be the ultimate line in the sand if and when we go on to retest and re-challenge that key inflection point, offering the most valuable risk reward short trade setup to the downside on a re-challenging of the 47,1980 price support. And additionally, if we break through that, a re-challenge of this additional hidden reactionary downtrend line with a just call it a multi-year price resistance and support, major high and reactionary low downtrend line that needs to be heavily defended by long traders and or bull traders really at all costs, with the 50-day moving average honing up to the upside that could expel for a potential duo price support setup if and when we come across this key pivotal juncture. And especially for longer term swing traders, the scaling in process short here really could boast a significant value play to avoid missing the trade if and when we go on to come shy of retesting that price resistance or prolonged setup move to the downside. Taking you out to ZIM, integrated shipping services based upon the daily interval, where I had mentioned on the 24th of December that it would be an additional great risk reward long trade setup if and when we had a 20% crash pullback to the primary reactionary downtrend line, and especially if you're an active and or day trader. That move to the upside netted you a good 7.2% gains in a single day there. Set some stops below where you have additionally the 50 exponential moving average hovering in up above with gap price support at the top, where the long trade setup favors the risk reward arena to the upside. Set some stops below to go on to re-challenge the 1257 price support and the 1336 price resistance in correlation of the 200 exponential moving average. Big shout out to one of my subscribers who highlighted the fundamental catalyst brewing within the Red Sea. Never underestimate how swiftly things can shift in the momentum trade for this stock, be it in either direction.